Hey everybody, today we're going to be doing another dividend analysis, and today we're going to be looking at HP Inc. or HPQ. I chose HP because they have had a rather large, precipitous drop in their stock price over the last month, so the yield has ticked up a little bit, and we're going to see if it's something that a dividend or income investor would like to buy. So right now, their yield is about 2.41%, just under 2.5%, which for a tech company it's better than average for a tech company, but kind of average to low average for a company overall, if you're looking at dividend-paying companies. And if we look back over the dividend history, we can see that they have been recently increasing their dividend. However, there was a cut back in 2015. Now, this occurred because HP spun off their IT business into HP Enterprises, whereas they currently only really do printers, computers, and other components. All of their IT and other things were spun off into a different company. When they spun off that company's cash flow and income went with them, therefore their dividend took a bit of a hit. But we have already re-eclipsed from that point, and we are above that now at just under 19.5 cents, and it's very likely that we'll see another dividend increase this year. So let's go over and look at the numbers, and we can start with our income. And if we go down to our net income, we can see that over the last 5 years, there has been a nice increase in net income. And if we look at our total dividends of $928 million divided by our last 12 months of income, we come out to a nice 28.7%, well below our ideal range of about 50% for our dividend coverage. Very nice there. That means if there is any hit to income, that dividend is going to be safe. Now let's go look over at cash flow. And if we see our cash flow, we can actually see that's been pretty stagnant over the last 5 years, actually down slightly from $3.7 billion down to $3.5 billion. So that could be a little bit concerning, but we can see that last year's free cash flow was right at the average. So it's not a big drop, but it is something to consider. And we can see that the last 12 months were well down about $1 billion over the previous 12 months. We can also see that huge drop in free cash flow from when they spun off HP Enterprises they were previously doing $8.5 billion, now we're at $3.5 billion. So that's something to keep in mind. But if we do check out our payout ratio of free cash flow, we come down to 26.2%. Again, plenty of free cash flow to pay that dividend. So even if this dropped a little bit more, there'd still be more than enough money left to pay that dividend, which is another reason I think that dividend increase for this year is also very likely. So how does HP make this income? How do they make this cash flow? Generally, they have two big segments. They have their printers and they have their computers. They do have a few other products that they make, other segments, but the vast majority of their money is made through printers and computers. And in their previous quarter, they had a record quarter, doing the most in sales for both printers and computers that they've done, well over last year's year-over-year numbers. So another reason that I wanted to look at HP is because a lot of people 2, 3, 4 years ago were saying this was a dead company. They said that when they spun off HP Enterprises that was the real cash cow, the IT, the cloud stuff, the AI stuff, that was where the future is, and that just doing printers and computers was going to make them a dead company because people aren't going to buy printers anymore. But as we can see, analysts are almost always wrong. Their printer sales last year were through the roof. Their computer sales through this year are again through the roof. They're doing very well in their personal computer and laptop segments, particularly their notebook segment. So keep that in mind if you go and look at their revenue. One thing to be cautious about is that there have been rumors from both management and some insiders who are saying that they're thinking about going back into expanding into those cloud and AI spaces. That's one thing that would concern me if I'm invested in HP, because if I'm looking at HP, I'm looking at a company that is pretty much the name in printers. If I think printers, I think HP, Canon, and everybody else is below that. When I think HP, I think this is probably the best printer company. They also have computers. They make relatively good computers, great in my opinion, but just good overall. They make good monitors, they make good laptops. If I'm an investor, I want to see them stick to what they're good at. You make arguably the best printers. Just keep making them and make them better. Don't branch out into things that could cost you money, that you don't know how to do, that you have in the past already gotten away from. So again, that's something to be careful of. So overall, who is this stock for? Is it for an income investor? Is it for a dividend investor? Who should be looking at it? The yield sitting at about 2.5% isn't particularly high, so if you're an income investor, this isn't really something you're going to look for. There are other tech companies, other computer companies, they're going to pay you a higher yield. If you're a dividend appreciation investor, this might be something to look at. If we look at our dividend history again, we can see that even though they spun off a very large portion of their business 5-6 years ago, they've already gone back over what their dividend was before that. So dividend appreciation, very likely. They do raise it every year. It's not by a lot, often less than a cent, but sometimes about 2.5 cents. So you're going to get some dividend appreciation. If you're looking for a tech company for a dividend appreciation portfolio, that's pretty good. The one place I think that HP really shines for people who would really do well with this is if you don't have a ton of money. If you're looking to get started in investing and you need a tech company with a dividend in your portfolio, HP's share price is incredibly low compared to its competitors. Something like, for instance, an IBM, which has a share price well over $100, people who are, living paycheck to paycheck can't really afford to put in $130, $140 a week. However, almost anyone can put in $29, $30, $32 a week to DCA into a very good, mature, blue chip company that pays a nice dividend. So if that sounds like you, if you're just getting started, if you don't have a lot of capital, if you're just looking for something in the tech sector that pays a decent dividend and isn't going to go out of business anytime soon, this could be a good choice for you. I hope that helps, and thanks for watching.